Hello and welcome to the Stock Planner channel. Today I would like to talk about an earnings play coming up next week. The stock ticker is DIS. Yes, that's Disney. And I don't know which direction it's going to go. Disney has been having some political issues, especially in Florida. They've lost their tax status. They have some various different political issues on wokeness. Their amusement parks are packed to the gills. Long waits, 2 hours to wait for a ride, my God. And to pay $120, a family of four, that's $500 or $600, then buy some sodas, and to wait 2 hours for a ride, crazy. But I have a feeling that aspect of it, of their business, is doing well. They're streaming. People are going to watch their streaming and see how that business is taking shape. But they own their stuff. They own their own movies, their own entertainment. It's not like Netflix or some of the others, Roku, that have to buy it. They're producing it. That's an advantage. And they've traditionally had a niche, a family niche. Seems to be losing some ground there. Anyway, I hope we can put a trade together for $300 or $400 to make at least 20%. And that gives us our 6% per quarter. And I hope to do it in a few days. Earnings play for next week. The Stock Planner channel is an education channel. We share our ideas. We're swing traders. I'm using a simple plan. I'm using some simple indicators. I have a watch list or several watch lists. I'm practicing some good risk management, not risking too much. And I think I have what a lot of you have is a good mindset. I don't mind losing a little bit. I have some confidence and determination, and I'm not taking myself too seriously. And I don't have to be perfect. As always, you're responsible for your own trades. You must do your own research. You must develop your own system, because you can't trade somebody else's system. You have to develop your own. And once you do that, you have a winning system for life. A winning system for life. It could be a slow process, though. Let's get started. This is Simply Wall Street. It's mostly free, and the paid version is only about $10. I have various different watch lists. My main one that I'm using right now has 139 symbols, of which Disney is part of that. And this is a news reader. Based on the portfolios I have out there, it produces news. And in this case, it's producing the upcoming events for earnings. There's no Disney on there. These are all stocks that are in my portfolios, various different portfolios. And there's Disney. It's reporting earnings on the 10th. And I'm particularly interested in Plug and AIG and maybe early next week, Home Depot. I'm not a big earnings person. Looking at Disney, it's undervalued. Earnings are expected to grow. That's sizable, 30%. And you got to remember, this is coming off of COVID. And it's once again profitable. There's just competitors, Netflix, Warner Brothers. And this is just chart. Look at that. And then now we're just leveled off and maybe coming off a low. This is a Seeking Alpha article. And they're getting ready to report third quarter profits. And yes, as I just said, streaming is going to be important for that report. It's highly competitive. This analyst thinks that the business is a fine business, and they feel that the earnings report will propel it to go a little higher. I don't know. I think it's facing some headwinds. We got a recession. I don't know, but I think maybe this report was going to be better than Disney is a profit maker, money maker, despite the headwinds it's facing. Here's a simple free tool that will predict the expected move of the market and the expected move of this stock. It's called OptionStrat, and we're looking at the Walt Disney Company, Disney, trading at 108. Earnings is coming up. The move for next week is about 5.3, and the move for the month is a 7%. 5.3 and 7. There's earnings. And that's going to be about 4% either way. Looking at another free tool called OptionStrat, and looking at a long call condor. Now, I'm not too sure. And so this is a debit spread, a debit strategy, because I don't want to lose too much money. And again, I'm not so sure about earnings either. So I don't mind pulling the lever, going to the casino and betting a little bit. So in this case here, setting it up by selling 2 calls and buying 2 calls is an easy trade to manage. My max loss is going to be what I have to pay. That's easy to manage. And the max profit is about the same, about $100. There's your break evens. Taking a look at the chart, So as long as it stays in between those 2 points, 102 to 113, we'll take a look at this in a minute. That's actually 114. We have a chance to have a winner. So this winner line is 4.5. That's about what the expected move is. So as long as it doesn't exceed the expected move. Now, this is a decision. If you think it's going to have a stellar report, it might very well exceed that 4.5. If you think there's going to be some headwinds against a good report, it might stay in between. Is it worth $100 to find out? And likewise, if it's going to be a bad report, 4.5 is right about there. As long as it stays in between that 4.5, as long as it stays in between that 4.5, we could take home some profit. And that's the profit you can take home. But I'm going to shoot for about half that, about $50. And $50 on a $100 investment is 50% in a matter of 5 days. Take that. So I'm going to shoot for half of that. So coming over to Trading View on the daily time frame, Disney, look at that long slide down. And as a swing trader, if you could predict those, you could make some serious bank, or predict that one. Earnings is here. There's the RSIs, and here's the RSIs. Every time it tops, it goes down. With that theory, and using the indicators, this stock should come down. And you got earnings. Will it come down to 102, which is about right there? And will it exceed 114? It's slightly lower than that line there, probably right about there. Is it going to stay here for the next 5 or 6 days based on its earning report? And with this situation that we have with the market, I have a feeling we're going to have either a slow grind down. This is what I think, a slow grind down. Or in the case of Disney, maybe a slow grind up. I don't know. But it's worth $100 to find out. $100 to find out in order to make around $54, which is about 50% profit in a matter of 5 or 6 days. So without going into too much more detail, what do you think of this trade? Put your comments below. Trading earnings is tricky. I don't do it often, but 1 or 2 lever pulls at the casino is okay for me. And I think I'm going to do 3. This one, JD.com, and AIG, and maybe later Lowe's or Home Depot. Happy trading. We'll catch you on the flip. Like what you're doing.